Hi, if you're looking at this video, that means you're either interested in stock markets as in you want to invest on it, or you might be thinking out of ways to jump into it. Should you not? How much should you invest? Is it worth it? Is it safe? So what I did was that over my past 10 years of experience in investing in stock markets, I have put this together for you so that you can see how things work here and then make your own list of points which you must keep in mind when you're going to invest in the stock market. Needless to say, stock market investment means you're investing in the organizations. You're picking up shares in those organizations that you select, and therefore you have to select the organizations rightly. There is a time dimension to it because there are some companies which do well at certain intervals of time, and there are very few companies which do well consistently. So you need to have an idea, you need to have your watch, you need to know what to look out for. And what I've done is that based on my failures and a few successes that I have had, I've put this together so that you can have real names out here. Now this is relevant and based on the Indian stock market that I have experienced and my take on this. The first lesson that we often go for is that if you get the right industry, that means the stock will perform well. So whether it be water, whether it be solar, whether it be wind, whether it be renewable energy, whether it be electric vehicles, now these seem to be the right industry sectors to get into. But you would soon see that that doesn't mean that you will have the right company to invest in. Now the example that I have is Suzlon, which did very well for some years, but it absolutely crashed and is in the brink of bankruptcy now. So it's not about the industry. It is about the company in that industry. Now there are industries where companies don't do well, but there are in those same industries you will see certain companies doing very well. So at the same time, when a company starts with a promise, which is very good, you're tempted to get into it. Obviously one should, but keep a watch. And my whole idea here is that don't wait for more than 1 or 2 quarters to understand if the company is performing well. If it is not performing well, take a plunge. If the shares are going down, don't hesitate, sell them off, because it will keep on going down if the management of the company is bad, in spite the industry being right. So look at the management. Sometimes they become over aggressive and invest a lot of money and then get stuck about it, and there are times when the management underinvests. So what's important is to look at the industry, in the industry the company, and if you get that right, you have got a lot of things right then. Also keep in mind, as the CEOs change or as the ownership changes of the company, there can be a different view related to that organization, and keep that in perspective. So go for the right industry by itself is not sufficient. That is your lesson 1. The next lesson, which is very critical, is that we then say that go for the right management. But then when the change comes, the right management might not be able to hold the ground. So for example, when the auto sector is going through tremendous change now because of BS6 going away and BS4 going away and BS6 coming in, and electric vehicles coming in, and there's a huge change in the landscape of that particular sector. Now a management which is growth oriented in a particular environment keeps on opening channels, keeps on doing product launches, and might not have prioritized enough funds into the research side of it. So those companies in future will not do well, but those companies which have invested in research would currently, perhaps the stock would underperform, but later it might soar. So what's very important again is that you have to look for the quality of management. How do you know quality of management? That's very important, because as small shareholders we don't have insights into what's happening. We don't know about the person who's the CEO. Every news magazines only talk good things about the CEO till the time there is total crash about something happening. So how do you know about the CEO? Ultimately, it's all about data. So if you look at quarter to quarter performance over years, and if there is consistent growth, and that would be definitely an indicator that the CEO and the top management team is good enough. However, that might not work during change. So therefore, if there is winds of change blowing, you again need to keep a watch on what the CEO is doing. So net, quarterly analysis or even monthly analysis for that matter can be very critical, depending on what's happening, what is the news clipping saying, what is the negative news about it, what is the positive news about it. Keep everything in watch when you're trying to take a plunge into a particular stock, because when we invest having a long-term perspective in mind, and in the long-term perspective, management can change, management will change, and a lot of different things happen in the competitive space, and the industry has to align itself and the company has to align itself. The company which aligns better does better. In this particular case, I invested in TVS Motors, and it has got a very strong management, it's got a very strong R&D. When they broke away from Suzuki, they developed everything in-house, everything, all ticks. But then somehow the stock doesn't perform. It did perform at one point of time, went up to 700 or something, and then it's come down to 400, and we don't know what's going to happen. Let's see. So therefore, keeping a watch. Very often, we think that the company which is displaying a lot of ambition has got a lot of good things going related to the management and ownership. However, that also might not be true. Take the case of Tata Motors, which went out and acquired Jaguar Land Rover, and we know that the Tata Group at that point of time went out and acquired a lot of companies. Tata Steel also acquired, I think Tata Global Beverages also tied up with Starbucks. Many good things happening in the global space. The company showed a lot of ambition. However, we saw that ambition did not translate into products the speed with which we looked for. So while there was a Jaguar tie-up, there was a nano thought, and there was too much of things happening in the company, and somewhere nothing kind of came together and it started sliding. So companies are ambitious. When they are ambitious, they invest. When they invest, typically if it's a good investment, the returns will start coming pretty soon and stock will go up. But then when I bought Tata Motors, the whole company seemed very ambitious at that point of time, but somehow they could not translate that capability into market success, and therefore the stock got a huge hammering about it. Is it a good company? Of course it's a good company. It's given iconic cars to the Indian landscape. But then times changed, competition came in, they got ambitious. The story seems to be all fitting together, but somehow did not translate into the marketplace and with products which was absolutely perfect for them, would have been perfect for them. Keep a watch. Companies that are ambitious, yes, good, theoretically fine. CEOs are there, yeah, good, theoretically fine. Ownership is strong, yes, of course. Brand is strong, yes, of course. Money do they have? Yes, of course. But then, could they translate that into market reality? No. And the stock got a hammering. And as investors, you might see everything else is fine, but the stock got a hammering, and we lose a lot in that case. One of the favorite things you will read in business journals and you'll see leaders speaking very often are, we got to be in the top 3 in the industry, in the company, globally, etc., etc. So typically, if a company is gunning to be in the top 3, ideally the share price of that company should also shoot up. Alas, that doesn't always happen like that, because share price doesn't look at only the revenue number or the profitability number. Shares typically look at the futuristic valuation of that company and not really whether they are in the top whatever. A company can be in the top 3 but making losses. The stock price will reflect that reality. So what's important is that when someone says we are going for the top 3, we are the world's largest, that doesn't mean at all that the stock will also reflect that reality. Now, when I looked at that, I got carried away by that thought. I invested in Arvind Mills, an old company, Lalbai Group, everything nice about it. They have a good story going. They have a retail presence. They have got strong brands in the denim space. They occupy all the mind share and market share, but the stock plunged. They did a restructuring, they broke up into several companies, but that restructuring also flopped. So the fact is that, again, is it the largest? It is therefore the best? Doesn't hold true. So keep a watch out when you're going for this kind of a swing. So do not let these management talk influence your investing decisions, because investing decisions in the stocks has to be made very clearly based on the profitability, the revenue, the futuristic outlook, and all of these other parameters that I will come on towards the end of this. My next thought related to this was, let me go for a sector which will never go out of demand. It's an evergreen sector, people will need that particular product and all, and the company is nice and well managed in this whole thing. So I selected BPCL. It had a very good management track record. The company's pumps, if you see for yourself, as an Indian citizen, you will see that those pumps are beautifully laid out. They are absolutely spick and span shining and all that. There's a courtesy extended to you, pure for sure. They were the first ones to talk on that language. So I went and invested in BPCL because automobiles are going to be there and the petroleum is therefore going to sell. However, the stock tanked from 750. Reasons multiple. Of course, we still continue to buy petrol and we'll keep on buying petrol. So never is the oil the reason for that. The reason is that it's about the way the organization is run. Now, this being a PSU, very often there's government intervention on the way certain events have to happen. So if there is an investment into some Russian oil field to be made, government might tell BPCL to do that. If there are some oil bonds that government gives and then takes out some money from the company, those don't really translate into cash so easily. So the company gets trapped for cash. So the oil fluctuates a lot, we all know that, but then government also prices it accordingly quickly. So net, you see that a huge amount of investments these companies have to make, whether it be modernization or it be related to safety or it be related to some government directives, and the management of these companies are highly influenced by the government decision making process. So therefore, even if it's an evergreen sector, one needs to be cautious while investing in these, and rather that holds true for any PSU and any government stock. Even though they are supported adequately by the government, the intervention doesn't let it run professionally as a company. So therefore, when you're looking for evergreen sectors, think about it. Power is an evergreen sector, but companies in power sector have lost a lot of money. That's because of the kind of policy making which goes around with it. So if there's a company or a sector which is very heavy into policy and gets influenced by policy a lot, one has to be cautious on that particular sector, even if it's an evergreen sector. We are seeing something similar happening to telecom now also. It's very evergreen, as in we can't live without it, but see the turmoil that the stock is going through. And therefore the thought after that came, if the size doesn't matter, then what matters? So I realized that what really matters is technology. Is the company really strong on technology? Are they investing enough in technology? And therefore, if there's a technology player who has got a market presence, that company is bound to benefit. Yeah, so I thought I had hit with the Eureka idea, and I went and invested in a company called Bosch. Now, Bosch supplies a lot of engines for the petrol and I think the diesel side also. And it's German driven, so quality parameters and technology and all is really up to the mark. You get some of the finest products from them. But when this electric vehicle concept hit the road, Bosch came out and said that they have got all the possible options for electric vehicles which is there available with them. So yeah, I held on saying that yeah, here is a technology company. So if there's a change in technology happening, they are the guys who will ride that wave. However, to my dismay, the stock didn't perform. Neither the options that Bosch talked of did they come through. And what we saw was a change of strategy into something like sensor and software, and which again did not impress people related to what they were doing. So though this company was heavily invested in the classical petrol and diesel related engines and parts and components, or the critical things related to it, this company could not really justify that their technology is shifting enough for the modern landscape, though they claim that they have it. In this whole process, the organization got confused, investors got confused, markets got confused, and therefore it wasn't very clear what's going to happen. A stock which was at a point selling at 22,000 rupees is now I think selling at 14, and perhaps it will go lesser. What's important therefore is that again, strong R&D, just like top 3 is not a singular number that you can go for, strong R&D is also not a singular thing that you can look for, specifically when times are going to change. And then, having handled size, having dealt with technology ability, then I came across a business concept called core competence. So if a company has a unique strength, I realized that that company should be doing very well in stock market also. So kind of, that gave me a thought. Yeah, so let me find out companies which have a core competence. So which is that company? I went and found out one which is absolutely a part of the DNA of our nation, which sells, the products sell very well, which has got a tremendous presence in all cities as well as in villages, and that company was ITC. Whether it be cigarettes, or it be hotels, or it be the food brands, or it be the Sunfeast biscuits, it was just there on the shelves of all these, right? And when we went out also, we saw that ITC products are there everywhere. So I realized this is the company to go for. So I invested. I bought ITC shares, lots of it. And then what happened? After some time, the stock started falling from 350. I think now it's 200 something, and there is no idea as to where it's going to stop. As the stock fell, I realized that I should buy more because that will average my losses. That was the another thing someone told me. So I bought more and more, and end of the day it kept falling and falling. So the thing is that even that of a company with unique strengths doesn't work, maybe because the e-commerce revolution upset it totally. They might have a business model, they might be doing what their strategy dictates, but the fact is that that was not translating into any stock market gains or stock price increase. That is important to be seen as well. When nothing seemed to go as per the management concepts that we have learned, I thought that let me try another route. Let me go for those well respected names in the Indian diaspora and the Indian setup, and then go for them. So I knew that Indians love tea. So yes, so if there is a company which is into tea, that should do well. So which is the largest one? I realized that McLeod Russell, after doing some homework, I realized that they are one of the largest in this tea business, and they've got some lovely tea gardens and all in India. I seemed to be narrowing down to the stock I wanted. Then I invested in it, and it was from the Khaitans family, I think, the Williamson Maker Group, old established setup headquartered in Calcutta. All the things seem to work absolutely right, and it is the thing, and McLeod Russell tea is supposed to be good, and it gets a high price in auction, everything like that. They've got some huge tea estates in Africa also, which they have bought. Yeah, no one could take that down. I realized that, and I ultimately thought that I've got it. This is the stock to go for. So I bought McLeod Russell. I think I bought it at something around 80 or something, 55 or 80 to start with, and then I kept investing in it, and later it's now at 4 rupees or something. So again, there are some, what I read in the newspapers is that there are some corporate governance issues, and the Khaitan family has taken about some money from there, God knows what. But the fact is, what they do will never be known to the stock, to the person who invests in these shares, because you don't know what the family is doing or how they are behaving with the funds that are at their disposal. And there aren't sufficient laws to support the small shareholder. Or even if you want to go to the courts, you know the process of Indian courts, it won't work out for any individual. So, got to be cautious again on that. Well respected names, okay, fine. That doesn't mean that you invest in the stocks. And the other thought was, let us go for a company that you see nationwide. No one can not see that logo. They are talked of for performance, they are talked of for professionality, and they are there. When you want anything critical to be done, without that company, nothing can move. One such company was Larsen & Toubro. Construction means L&T, critical construction means L&T, bridges, huge buildings, the tall ones which go right kissing the sky and all, nothing but L&T. That's what it was. I said, yes. All the metros in the country, largely by L&T. I said, yes, I have got it. Now my stock is going to be L&T, and I got to invest into that. Then I put in money. I put in money when the stock was at 1700. Now it's crashed to 1200, and it tries to edge up a little. It again goes down. Government says that infrastructure is a push, so therefore that stock should go up, is what I think. I invest a little more, but it still slides a little down. So what happened here? So you see these companies and the strategies, but the fact is that they're also constantly investing. Now when they are investing and making buildings, they might have a good order book, but that order book might not be generating enough cash because either the people they are working for are not paying them on time, or they have a huge overhang of capacities. They might have excess capacities which they have built up optimistically, which hasn't been used. So you never again come to know totally what is the scenario. And since you don't know the scenario very well related to capacities being utilized and all, the fact that you go with a logo that you see all across is again flawed. So be cautious on when you are investing in stock market. Don't fall prey to what is easy to be seen. Then I thought, let me go for something which is indispensable. What is it that someone can't live without and is willing to give everything to have it? Well, the answer was there. Everyone wants to live. Everyone wants to live. Everyone wants to live long. So therefore, which is the stock that I can invest in that? That stock should never go down. Then I invested in Lupin. I thought I have got a killer idea. I think the stock was at 1400 or something at that time when I invested. And I knew that, it'll only go up and up, or at least it'll stabilize, and if not meteoric rise, small and steady rise. The company had expansion plans and all that in place. A generic producer of drugs. Seemed to have reasonably good R&D. There was a family background behind it. Then I realized that that stock fell to half its value. I said, what really happened? Why did the stock crash literally so much? And we realized that there was, based on the news which came out, is that the US FDA found quality issues with that company and a pharma pack in general in India. Now, as an investor, how would you ever come to know of the internal things which is happening in the company? The quality issues which are there, or the bypassing of the quality controls which is happening in the organization. As an investor, you can never come to know of these things. So, but then we get subjected to these actions by the management, which knowingly or unknowingly has been happening in the organization. So the fact is that as an investor, one has to be aware that how can you judge whether the quality issues are happening or not. So yes, external inspection like US FDA is there, but in most of the things that happens, that goes around, you never come to know about it. So therefore, when you are investing in stocks, also understand that everything and every dimension of the business you will never come to know. So if you know the few important and the critical criteria, go for it. Go for the stock. But also know that there will always be criteria which you don't know, like corporate governance issues, like quality issues, like management change, like the outlook towards change management. You'd never come to know of these things. So keep a watch on the news items related to that particular company where you have invested in, and be able to take action and quick action based on that. Now I thought that, enough of everything that I have played around with. Let me figure out a unique strategy which just doesn't go down. And that strategy was invest in companies which earn in dollar revenues. I thought, again, I have got it. This is the Eureka strategy for me, and I got to go for it. Now, the other stocks in the IT pack I considered Wipro, TCS, Infosys, and I saw that, Infosys and TCS were pretty highly priced in any case, so I settled for Wipro. They also earn in dollar revenues, and everything about them as well as Infi and TCS seemed similar from the websites, so I went for them. And then they had a CEO who was an ex-TCS, and they seem to have gone through a process of churn and senior management making way for the newer guys and all. Everything seemed to be right. So I invested. And after I invested, the share just started sliding down, though it didn't crash, but it kept on sliding down. So, and it steadily somewhere around 270 or something I invested, and now it is somewhere around 230 or 240. So it's gone down and I've lost the money there. Now the question is that why would this happen? After all, dollar has been rising in values, Wipro has been getting its revenue, and if you see, the most interesting part is that the founder of the organization, which is Mr. Premji, he's getting richer and richer. Premji Invest is earning a lot of money. But somewhere they have figured out something which we have not been able to figure out about the organization. What is important, therefore, is that whenever you are looking at stocks, you need to figure out that while the strategy might be right, which is the right company to invest in is equally important. Is this company able to execute the strategy well is very critical as such. So, well, yes, I went where dollars are there, but I couldn't make my dollars there. And then I looked at another strategy. I thought that things which are most critical to the country, to the economy, to people, to the government, I need to figure that out and then invest in that particular stock. So that particular thing was water. Now if I look at water, we all know that water table is stretched and the environment and issues related to it and all. So which is that company which is working on wastewater and has technology and expertise in that space? I did my whole study around it, and then I came to a company, VA Tech Vabak. They had all the technology and the ability to work on the wastewater, and there was a lot of news articles saying that, in the Namami Gange project and other purification projects, they are getting contracts from the government. All being fine, I invested in that at 600 rupees, and now it's close to 200. What happened? Why did it go down? So what I realized is that the point at which you enter a particular stock, the price point, is very critical. One should not be over enthusiastic that having identified a good company, that means this is the right price. It might not be the right price. You might be overpaying for it. So therefore, when you have decided to invest in a company, do your study about it. Its 52-week high, 52-week low, its PE ratios, what does the other peer look like, and then start investing in small bits and pieces. Don't go whole hog and one shot. It doesn't work that way. So invest a few in perhaps 5 shares, again 5 more, and keep a watch on where that organization is going and how is it performing. And once you get to see that the stock is going up, be mature enough to sell it. Once you know that the stock is going down, be mature enough to then go down with it. So be merciless about selling it when it's going down. Definitely ensure that you do not delay to sell. Ensure that if you get an uptrend happening somewhere, it always you ride that particular curve. So be a little cautious, be curious, and invest rightly. That's very critical. And then I thought, okay, enough is enough. I will also be opportunistic now. I'll be smart cookie and I'll be opportunistic. When the stock really seems to be down, I'll buy it. So then what I did was that there's this company called KSK Energy. It's an energy company. They have got power plants in some 6 or 7 different locations, and their stock was getting hammered, and they came down from 100 to around 12 rupees per share. And a company which has got an installed power base, they are into 600 megawatt thermal power plants and all, can't be that bad also. So I invested in it, and I invested and invested because I knew that this guy has to go up. It can't go down further. But then the stock now trades at some 2 or 3 rupees. The thing is that we have to see how is this company running a particular asset. Now an asset might be 600 megawatt power plant or a certain power generation capacity, but is that company being able to generate that kind of power? Also, power plants collect their money from the state governments, and the state governments are notoriously bad when it comes to making payments. So there is an overhang of payment always. All these put together, any such company which is into capex and all can go into a cash crunch kind of a scenario. So what's very important is that it's important to understand the whole cycle from cash to cash, as we call it, the working capital cycle or the investment cycle from cash to cash, and then only invest. Not because someone has invested a lot of money into a company like KSK, the founders would have invested a lot of money, doesn't mean that they'll be able to generate that money out. After that, I decided that I need to go for those companies which are in real demand. So there was this whole news on article on graphite electrodes and how India is a producer of graphite electrodes and how graphite electrode companies are doing very well. And the stock had shot up to some 1400 rupees when I bought it. It went all the way to 2000. I kept buying because all the steel plants to reduce pollution were going the graphite way, and the CEO was on the television talking real good things about it. And now that stock from 2000 rupees has come to some 800 or 900 rupees. What happened? The CEO was giving such a great picture at some point of time. Where was the issue? When I researched later, I saw that there is a raw material which is a critical one which comes from Japan, and that raw material might not be easily available. That was one issue. Later I saw another news article which said that the CEO or the promoter had decided to take some 216 crores as a payout for himself. So here was a case where the company is not doing well. The stock had got hammered. Maybe it was operationally doing good enough, but the stock was getting hammered, and investors were losing money, and the greedy promoter is taking out money. So if it's a case of a greedy promoter, you got to look at it. So it's very important to see that who are the promoters of that company, who are the people behind it, what is the kind of family. They might have they might have done some good business, but does that mean that the person is not greedy? Does that mean the person cares for the people who have invested? You'll find many promoters are there who care more about themselves than about the company or the investors. So if you analyze the stocks well, you can see these kind of people. These are the kind of people who, in spite of profits or all, will give out huge dividends because they want to fill their pockets. So see this aspect as well as to who are these people who are distributing dividends in line with the profitability. If the profit dips, the dividend dips. If the profit increases, dividend increases. But if there is a company which is constantly giving dividends or fixing the promoter salaries and increasing it constantly, or the board of directors remuneration, they are increasing constantly irrespective of the performance of the company, be aware of such companies. It's difficult to find that out, but one has to be able to spot that. So after these 14 lessons, you might be thinking that I have stopped investing in stock markets. Well, that's not true. I have in fact increased investment in stock markets because all of these lessons were absolutely invaluable to me. So now I know that I need to look for the promoter. I need to look for operational capability of the organization, the P&L, the cash flows, the balance sheets, the inventory positions, how they are. I need to look at is the company growing its business? Is the company increasing in net worth? How is the working capital cycle looking for this company? Is it investing in R&D? What is the outlook of that particular industry that they are talking of? And are they in the B2C or the B2B space? All of these dimensions, when I start looking at them in tandem, that is when you can take an informed decision related to a company. Now, as the change happens in the industry, every company goes through a business cycle. And when that business cycle happens, what's very important is to know whether this company will be able to survive that or not, or is making the decisions through which it will come out relatively stronger. Now, what also happens often in stock market is these opportunities come up, small little opportunities. For example, this is the time when we are talking of coronavirus. As a result of coronavirus in China, we know that supply chains or pharma or auto will start getting affected very soon. Now, pharma needs something called APIs, we know that. And APIs are made in India by companies like Natco Pharma and all. And some time before, APIs were totally out of fashion. Companies which used to have API manufacturing facility, they also closed it down. But now suddenly these API companies are in demand. So should you invest in this stock? If you decide to, you will go for opportunistic investment, because remember, we never know when will China bounce back, and whenever China bounces back, again these companies will go down. Their stock price and all will go down. The whole business world is all about reducing cost, increasing profits. It's about finding out new avenues to market. It's about investing in R&D. It's about increasing the net worth of the company. It's about adding value to the society. It's about handling change. It's about leading change. So organizations which have got good management, committed ownership, which is not into frauds or anything, has got good products, has got a global footprint or aspires to have a global footprint, such are the companies which you need to watch out for. Now, is there one name that is perhaps not listed in the stock market, but I'll be so happy to have it there if it's possible? Yes, there is one name which comes to my mind. I will look out for that particular kind of a stock if it comes into the market, and that name is Haldiram's. So through these 14 lessons and this learning, I want to share with you my journey of the stock market. It's been fantastic. It's been a lot of learning. Yes, I have lost money. So what? I'll also make the money. That's not the target. But what I learn about business is that you get to know every dimension about it and the different perspectives about it just by this one interesting metrics and the back-end financial calculations that go with it. So I would always suggest everyone to invest in stock markets, or if not directly, through your contacts as in mutual funds or portfolio management services and all. Find out who's a good person, go with established names, and definitely do invest in stock markets, because that is the only way in which you are directly investing into the companies, and therefore you are part of the growth journey of a nation. As a nation, India is bound to grow from its 2.3 trillion to 5 trillion and to 10 trillion. We are bound to become the third largest economy in the world. It's got to happen in the next 10 to 15 years. This won't happen because of government intervention. It will happen because the private players will come up, and these, with association with their foreign counterparts or through their own ability, they will develop to big nations, big companies and global organizations themselves. So keep a watch out. Invest in stock markets, or directly or indirectly, and be cautious of what is happening. And any change is again an opportunity for you to change your portfolio. Any management issues will start reflecting in a quarters in the financial reports. Keep a tab on all these, and that is when you figure out the stock market. So I would always say that if you are investing, your Sunday, keep it at least half an hour for your stock parameters. Identify 5 or 6 parameters which you want to trap, write them down, and every week then you have some data with you. And when you have this data with you, you can make some analysis, or you can see some patterns into it. So happy investing, enjoy the stock markets, learn from it, invest into it, make money, lose money, don't worry. Keep investing in stock markets.